Welcome to Stock Talk with Nico Criticos. Today we're going to be going over my bullish thesis for Splunk stock. And so the first thing I'm going to show you here is that I own 22 shares at an average cost of $115 a share. And so far I'm up 27%. And I want to make clear also that my bullish thesis for this company is not based on the fact that I think they're the greatest company in this space or anything. It's purely based on how low the stock got beaten down and how undervalued I thought it was because of that. So if we take a look over here, we can see that, let's see, earlier or last year, the stock hit $223 a share and it got beaten down all the way to $112 a share a couple months ago. And so when I saw this, I started buying in. And since then, it's pretty much just been running up. However, as you can see here, it still has not reached the levels that it was trading at before. And so that's why I still think there is some room for upside. So my first thing we're going to go over for this stock is their customers and their partnerships, because they have over 510 customers as of this year that are paying them over $1 million per year of annual recurring revenue. So that is phenomenal. And this number was up 44% year over year. So it's growing very fast. And one of my favorite things to see in a company is when they're working with other companies that are also very credible. And so for this company, that is Shopify, Intel, Visa, Domino's, Macy's, and Carnival Cruise Line, among others. But those are some of the big names. And so that just shows you that these big established companies are working with Splunk. Now, the other thing here is, as you can see on this revenue and income graph, they have not reported a profit yet for the year, and that is the big problem. Then we can also see that revenue has been growing very fast, and the reason the stock got pushed down so much from its highs last year is because in 2020 they announced that they're going to be shifting from a model that was based off of licensing fees, and like it was a one-time, just an upfront charge, versus now they're going to be doing it through the cloud. And so the revenue is going to be spread out more sporadically. And so what that's going to do is long-term, it should make the company be able to become more profitable, and it's going to make more reliable revenue. It's going to be more equally spread out versus just a one-time big thing. So that is what pushed the stock down, along with the fact that there are a lot of competitors in this space. And if we look at this little list here, it's going to show us that it says Splunk is the market leader in analyzing machine data to deliver operational intelligence for security, IT, and the business. And so this shows you all the different companies in that industry and their Splunk's competitors. And so at the top, we have IBM that has an 8.3% market share. Meanwhile, Splunk is in 5th place with 2.8% market share. So it's the main thing I want to get across with this is, especially in this cloud space, there is so much room for, lots of companies to succeed. So IBM, Splunk, Datadog, Palantir, what else? Maybe a Salesforce. There's tons of companies that can become successful in this space. It doesn't have to be just the #1 competitor. And so Splunk is still very small, but they are growing fast. Okay, and that's why if we look at some of the metrics here, we can also see that a lot of their metrics are high. A lot of the multiples, like the PE, the price to sales, a lot of them are trading pretty high. And so that's just because they're factoring in a lot of growth for the future. And so if we look at some of these ratios, we can see that, well, right now it has a negative PE because they're not profitable. Price to sales of 9. And although that's kind of high compared to where it was in the past, that's not too bad. What else do we have here? We have EV to enterprise value to EBITDA, not the best number. It's negative. And so that's one thing I don't like about this company. So I don't want to say that, this is going to be the #1 player in this industry. I'm just saying trading in this, $120, $130 point is too low. I really do see it coming back up to, maybe 100, at least 170, $180 a share. And so that brings me to my next point, which in the last couple of months, this stock has been on a huge run. It's gone from 112 to now 147. And there's two main reasons that push the stock up a lot. The first one is that a private equity firm called Silver Lake invested $1 billion right around this point, I want to say, somewhere around here in June. So that was the initial thing that shot it up. Then, well, like a week ago, an analyst at UBS upgraded the stock with a price target of $175. And so I see that's I think it's going to be a reasonable price for this stock to hit. Now, the other thing here that makes me bullish on this company is how many different hedge funds own this, or just funds in general. So we can see that as of right now, there are over 650 funds holding this stock. And I mean, let's see, there's more calls on the stock than there is puts, which is also a good sign. So I think the stock still has some room to run. Now, the only thing that does have me doubting this company is, one, yes, competition. There's lots of competition. There's Microsoft, there's Google, there's all these companies. So that can hurt them to some degree. However, how I said, there's still space for Splunk to be successful. And then the other thing is the profitability. Because let's see, if we go back to this, we can see they're still not reporting a profit. And I understand they're growing. That's normally an understandable thing. But they do need to, give some insight into when this profitability stage is going to be coming and how long investors are going to have to wait. That's something we need to know. But other than those two problems, everything else is looking good. So at this price, 147, it's a decent deal because how I said, I think it's going to be 175, 180. But I would maybe start, if you're going to invest in this, I mean, maybe start small, because it could drop back down to $130 a share. So I don't know. I see a lot of potential with this stock, and I'm hoping that the company can report a profit in sometime in the next year or two. And yeah, that is pretty much it. Thank you for watching.